Hey guys, thank you for watching the Graham Strategy channel. As always, I start by reminding you that I'm not a financial advisor and I do not make any recommendations on what you should or should not buy or sell. We are in July now and we're getting close to the release of most Q2 reports. So far, none of the Graham Strategy companies have come out with their quarterly report for the second quarter, and we will have to wait until around the 20th this month for the reports to be released. Except for Betsson, all of the stocks in the portfolio have performed quite bad since the beginning of the year, and thus the portfolio has underperformed as compared with the OMX30 index, with a gain of only 2.46% as compared with the OMX30 index, which has grown by 12.29% since the beginning of the year. But the Graham portfolio still beats the index since the start with a gain of 41.8%, which compared with the OMX index is almost 4 times as good since it has only grown 12.8%. It is too bad that the strategy can only look at accomplished results without any consideration of future expectations, but perhaps that is also one of the strengths in the long run. The PE ratios of the companies in the portfolio are very low. Boliden 7.8, Skanska 8.0, Betsson 11.1, Billerud 4.7 and JM at 6.1. But the market believes that the companies will not be able to maintain such good profits in the near future. However, if they prove the market wrong after publishing the results of the second quarter, a significant correction is possible. So let's wait and see. So let's look a little bit closer at one of the companies and make a rough DCF analysis, that is a discounted cash flow analysis. And we do this on Boliden, which is one of the companies in the portfolio. We use the tool provided in Börsdata. So this chart shows the revenue and profit of Boliden over the past 9.5 years. The revenue has increased by 129% and the profit by 478% over this period, which can be converted into an annual revenue growth of 9.1% and an earnings growth of 20.3%. And if we plug in these values into the DCF tool with a 10% discount rate or wanted rate of return, and we assume that the company will keep developing at the current pace the next 10 years, the current expected value of the company is 2,625 crowns, and that is with a 20% margin of safety, which you can see here. The actual market value is only 311 crowns, and thus the market does not believe that the company will develop this well. However, even if it grows only at half this pace, its value today would be more than 800 crowns. Or 829 crowns. So by just valuing the company at the PE ratio of 15, it would be 602 crowns. So it seems like a pretty good buy, especially if we believe that metals and minerals will still be needed in the coming 10 years. And we can repeat this procedure for the rest of the companies in the portfolio. And if we do that, we get the following valuations for the remaining 4 companies. Skanska, it has grown almost no revenue growth, only 1.44% per year, but an earnings growth of 7.86%, which means it has improved its margins over the years. And if this growth will continue for the coming 10 years, the value of the company would be 274 crowns, which is fairly close to the 15 times PE ratio. Which can be compared to the current price of only 153 crowns. Next, we have the gaming and gambling company Betsson, which has had a substantial growth of 12.3% the last 10 years, and the profit has grown by 7.23% per year. So the DCF value of this company becomes 361 crowns, which is more than 3 times that of the current price of only 113 crowns. The risk with this type of company is that it can be affected by legislative changes, but such changes are usually confined to a single country and has usually only a minor impact on the company. Next is the paper company Billerud, which has grown by 8.85% per year over the past 10 years with an earnings growth of 13.8%. However, a large portion of this level of growth has occurred over the past 2 years, and it's unlikely that they will be able to sustain this level of growth in the long run. Nevertheless, this gives a DCF value of 662 crowns, which is almost 8 times the current share price of 85 crowns. And finally, we have JM, the real estate company JM, which has had a revenue growth of a measly 1.65% per year over the past 10 years and an earnings growth of 2.64%, which gives a DCF value of 274 crowns. That is almost twice the current share price of 152 crowns. It's quite interesting that both Skanska and JM show close to exactly the same valuations and market prices. So that was all for today. Stay tuned for updates on the portfolio, subscribe and hit the notification bell to receive updates when I release a new video. So until next time, as always, stay sharp and follow your passion.